Hello everyone. It's Khaled. Welcome to today's daily pitch, 5th of Feb 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Of course, we will start with our economic calendar and see what do we have as pre-planned economic events for today, and then we will go through our analysis. Today, we will be analyzing Euro USD, GBP USD, and gold as well. So, moving on to the economic calendar. Okay, looking at our economic calendar, we have some PMI, construction PMI for the UK. It came out better than expected, but it's still below the 50 grade point. And what is more important are two rate decisions today. We have the Bank of England and we have the ECB. Both are expected to keep interest rates the same, and this is already priced in the markets, I believe. What will be more important for the Bank of England and the ECB is the forward guidance they will give us to know what are the expected steps. Looking at Bank of England, the expectations out of 9 members, it's expected that 7 members would be voting for a no change versus 2 members for a cut. Keeping in mind that the inflation in the UK is still really high, above the 3%. The economic data is not the best, so keeping interest rates unchanged in order to fight the inflation is the best decision they will make. So this is related to the ECB, for the Bank of England. And now regarding the ECB. Well, to be honest, the ECB is still in a better position than the Bank of England. The inflation of the ECB is almost yesterday, I believe we had the inflation numbers. Yes. The CPI came in at 1.7%, below the 2% target, and the core CPI, which is excluding food and energy, came in at 2.2%. So the inflation in the Eurozone is better. So that's why we are seeing that the ECB, there is no need to cut interest rates. They are keeping interest rates stable. Some people were asking why they will not increase interest rates since the inflation is below their target. Well, in order for any central bank to say that really the inflation is below our target, they should see the numbers maintaining for several months. It's not about only one report that you have the inflation below the 2%. You have to see several months of this number. Inflation is stable at your target or slightly below your target. And keep in mind that the Eurozone is not just one country, it is several countries. Whenever we're talking about the Eurozone, the most important economies in Euro are Germany and France. France had some political problems previously, while the German government was making some stimulus in order to boost the economy. That's why the ECB is taking it step by step, moving slowly, and currently keeping the interest rates at 2% with no change. Moving on during the day as well, we have the initial jobless claims for the US. Usually it doesn't hold too much weight, especially that it's a weekly report. The range for the initial jobless claims is between 180K to 220K. Anything above or below these numbers, it will have some impact. What else do we have? We have the JOLTS opening. We will see if it will be released today. And regarding tomorrow's economic data, it was scheduled that we will have the non-farm payroll and unemployment rate, but due to the partial government shutdown, I believe this will be postponed. Let's move to the charts and see what is going on. Looking at the dollar index, we discussed this previously, that after it reached the 95.5 level, currently it's rebounding and we are breaking slightly above the 97.5. It's very important to see if we can maintain this upside move, maybe retest, form support here in order to be moving up. My next target the first one is the 98 and the next one is the 98.6. As for the treasury yields are moving up. The markets are pricing in that Kevin Walsh, after taking Jerome Powell place and position, he will be more into the hawkish side in order to fight inflation. As for the VIX, or the fear index, the volatility index, we are seeing some spikes up, and this is mainly due to the geopolitical tensions that is taking place between US and Iran. Sometimes they say that they are having talks, sometimes the things are escalating, so we have slight fear in the markets, but nothing major. I believe for the VIX to see a real like a real impact and fear, we should see the VIX above the 20 in order to have some impact on the equities. Our first pair for today will be Euro USD. Let's have a look at Euro USD. At the 1 hour, we will be drawing some important zones and key prices. Well, currently we are at an important area of interest. I will be marking this one as well. It's not a major one, but we previously saw some price reaction. And of course, let's draw this one at the 1.20. It is a very important area. Regarding Euro USD and even GBP USD, the main movement took place not because of the euro itself or of the pound itself. The main move took place due to the dollar having high volume and volatility. So the drop here on dollar was reflected, of course, positively on Euro USD and GBP USD. And right now, dollar index is seeing some strength. That's why we are seeing the Euro USD dropping. Regarding the Eurozone and the countries there, well, specifically Germany, I'm always talking about Germany because it is the biggest economy in Europe. Whenever the Euro USD reaches the 1.20, it is like an alert price. They do not like it too much because they are countries that focuses a lot on exports. And whenever you're a country that export a lot of goods and services, if your currency is getting stronger, this will make it more expensive on the people importing your goods and services, and in this case it will affect your economy negatively. And speaking about this point, the dollar index, we remember last week the US president, whenever the DXY was dropping, they asked him, what do you think about the dollar? He said it's good, and he didn't say anything negative. In other words, he looks like he's supporting weaker dollar in order to boost the exports and as well to have a lower cost of debt. So let's look again at the chart, and technically speaking, what I will be looking for on the Euro USD. At Euro USD, currently we are at 1.178, or even we can say near 1.18. The first area of interest I would be looking for, in case the dollar index continued its strength, I would like to see an intraday candle for Euro USD closing below these candle lows, the next one just making an upper wick, and in this case my target will be here at the let me move it a little bit up. I would say at the 1.17 flat, which is a psychological and flat number area. So this is the first scenario. If we break below this level, I will be looking at the 1.17. The next scenario, what if price didn't break below this level? Well, to be honest, for me, the whole area here between the 1.18 to the 1.185 is a no trade range for me. We can see just price bouncing, consolidating, nothing major taking place. So for me, I will not be trading here. I will be waiting either to break lower, or in case we have any economic data or economic news supporting dollar weakness or euro strength, I will be looking for a break above these candle highs, above the 1.183, retesting, and my next target will be here. I will be looking at the 1.195. I will be marking this area as well. So these are the two areas of interest I will be looking for. As I said, here it is a no trade range. I will not be trading within this range. I will be looking for candles breaking above or breaking below to test these zones. And of course, keep your eye on the economic data and headlines. Let's move on to GBP USD. One more thing, of course, to note that because today we have the ECB and the interest rates are expected to stay the same, just we need to watch out for the forward guidance the ECB will give us. In case they are hawkish, this trade idea will be supported. In case they are dovish, this trade idea will be supported. Moving on to GBP USD. After GBP USD, I will be analyzing gold. Yesterday, I had one entry on gold. It was a buy limit. It was activated. Stay with us and I will show you what was the result. So this was our previous analysis on GBP USD. We expected some kind of rejection at this level. We had 1, 2, 3, and then we broke higher. Of course, this was supported by a fundamental catalyst. I'm going to delete all these. And let's see what's going on. As you can see, due to the dollar strength, here it's gaining, the GBP USD pair is dropping. So the first area of interest I will be marking, this one is an important area of interest for me. I will be marking this important zone. And here as well, it's not a major, but a minor one. And I believe we could see as well some kind of reaction. You can see we reacted here several times. So the first, well, actually, we are seeing some movement on GBP USD right now with London session. The first thing I would like to see on GBP USD, if we have a strong candle bearish closing below these candle highs, below the 1.355, the next candle making an upper wick, I believe we could be testing these levels at the 1.348, or I prefer to go to the 1.35. It is more like a psychological number, the 1.35. This is the first scenario. My next scenario, what if the hourly candle that will close in 20 minutes just reach this level, the next one rejects, we could see something like this. So in case we reject it, I will be looking at the 1.362, of course, because we can see that candles consolidated a little bit and then we had some drop. Just give me 1 second to double check if there is any economic data or headline being released right now, because we are seeing some kind of movement on GBP USD. Well, it doesn't look that there is any headline, just some volume during the London session. That's good. We always like, as traders, like to see some volume. Anyway, back to our analysis. And in case, of course, we had additional GBP strength, in case we are moving, weakness, in case we broke below this level, my next area of interest, especially if we break below these candle lows at the 1.348, my next area of interest I will be looking at is the 1.337, keeping in mind this level that we had several price reaction and a lot of candle wicks. These are the trade ideas I would like to see on GBP USD. I will be putting just like alerts at these levels. Other than that, I will not be looking at it. Keeping in mind that we have the Bank of England rate decision, it's important to see what is the forward guidance, and it's important to look at the voting, how it will come out. For example, let's say that instead of expected 7 members to vote unchanged, we had only 2 members, and here we had, let's say we had 5 members here and we had 4 members here. This means that more members are pushing into a rate cut, and this will be bearish for the GBP. Or let's say all 9 members voted for a no change, this will be reflected as hawkish. So here it's very important to watch how the voting will take place. Moving on, let's move on to gold. Before moving to gold, make our analysis, show you my entry. If you like our content, don't forget to leave us a like, follow and subscribe. If you want us to analyze any currency pair, just type for us in the comment section. And after analyzing gold, we have our special guest today. It's Thursday. We have Dillon with us. He will do some analysis and share some trade ideas as well. Okay, so looking at gold. Well, yesterday, okay, we were here. Yes. Yesterday, I was looking at this area. I said that, let me hide here. Okay, regarding my entry yesterday, which was a buy limit. First, I was interested in this area where we saw several candle wicks and price rejection. So after the price movement went to the below slightly the 5,100, we start to see some bearish momentum. I had the price limit, buy limit here at this level. To be more specific, let's zoom in a little bit. My price limit, my buy limit was the following. I had it at the 87. I had my stop loss at 57. and my take profit was for $100 like this. This was after NYSE. As you can see, the volume was very strong. I just got an alert that the limit was activated, then another alert like minutes later that stop loss was hit. I know it is unfortunate. My stop loss was hit like in a difference of 90 pips. I know 90 pips sometimes will sound a lot, but with all this gold volume and volatility, 90 pips is considered nothing. So I had an entry at the 87. I had a stop loss for 300 pips. But it was hit, and that directly the price continued up to my take profit. So this is the times where you are somehow unlucky. You identified the correct area, the correct zone to enter. Your bias was okay, but you were just wicked out of the market. So here I took a loss yesterday, although my direction was correct. For example, if price didn't wick me out, I would have gotten my 1 to 3 risk to reward ratio. So I just wanted to share this with you to show you that, especially in this volatile market conditions, and specifically in gold and silver, you will see such a huge price movement, and sometimes a 1-minute candle could hit your stop loss and continue in the direction. Now, speaking about gold, fundamentally speaking, all the fundamentals are still supporting gold bullish momentum. We have to keep in mind that I'm not sure that we will see the same volume whenever we saw here during the beginning of January. So the price area of interest I will be looking for is the following. In case price went down to the 4,760 and I start to see some candles rejection, I would like to have the following price action like this. This is my first area of interest. My second area of interest for gold, in case I start to see that a price is breaking below the 4,770, closing bearish below this level, my next area I will be looking for is the 4,650. You can see it is a very important zone. We reacted here it was a gap, here we reacted. So looking at this level, I will monitor the price action. In case I start to see some rejection, I will be looking for something like this. And my final area is the following here at the 4,560. Reaching this level, I will monitor closely the price action as well. I would like to see something like this as the following. As for the 4,400, I don't believe that we will be testing this level during this week. Of course, you will never know. Last Thursday and Friday, the price movement was crazy. Hundreds of dollars gold dropped. You will never know what will happen. But personally believe I won't believe that we will be testing the 4,400. In case we tested this level, that would be nice. It will be like a zone where buyers were interested in previously and will be looking for such price action. So to summarize it on gold, I have the 4,770, 4,650, 4,560, and the 4,400 flat. These are the zones I will be looking on for gold. Other than that, I will stay away. Okay, guys, so that's it for my analysis for today. Please, let's all welcome with us Dillon. Hello, Dillon.
Morning, everyone. Hope everyone's well.
Hello, Dillon. There is, I believe, some echo in the sound. If you can lower a little bit your mic, please.
Is that good enough?
Still having some echo. Let me double check. Try now.
Hello, is this good enough now?
Yes, that's better now.
Okay, no, perfect. Okay, just a quick recap from where we left off, everyone. So we previously, in our last video, we previously discussed a strong bearish structure, redistribution in the mid zone, liquidity sweep below our prior lows near 16.5 to 16.20,